And welcome to the Trading Zone. This is going to be a quick preview. We're going to touch on volatility. We'll be back in the noon hour lunchtime talking through the whole show. We're going to have a big trade to show to you guys all. It went out to our subscribers this morning already, so they're already in that trade, or if they like it. But yeah, we just want to jump on this morning, give you a quick preview on volatility as we start the week. Brian, do you have any thoughts on volatility real quick?
Yeah, Joe, thanks for having us. Brian Stutland here, portfolio manager at Equity Armor Investments, where we are trading volatility with long stocks all the time. So we love talking volatility, both of us former traders in the VIX options pit. So we know everything that there is to know. I at least like to think that about volatility. I mean, when you look at the landscape, it's interesting. You know, Joe, you and I have talked about it, is we've got to own volatility when the VIX gets down to the 15 level. It seems like that causes some sort of resistance in the market. You get a little hiccup, at least 1 or 2% pullback. Although that doesn't seem like a lot these days, it's something to be, taking a look at. And yeah, this chart has shown that again and again, we've seen things happen. It's been quite some time now, right? Weeks since the last really kind of major spike event. So it doesn't go this long normally before you get like a little bit of a volatility spike. So I expect something coming down the pipeline, but really we've got no news other than CPI coming out until this week. And then after that, the Federal Reserve makes a rate decision after that. So we'll see.
I think those are going to be crucial news events, those, Brian. They are obviously going to be market moving. I think the market's pricing in a cut. That's priced in. But what's the reaction after that? What's the Fed commentary along with that cut? Are they going to give a dovish cut? Are they going to give a hawkish cut, if there is such a thing? I think they're going to lean towards that because they kind of do one thing, say another, usually. But watching the volatility of the bond index actually did kind of pick up a little bit last week, Brian. I think this is really important. I feel really good about the market, but this is worth noting here. This is worth watching. Maybe a little bit of some bottoming in bond volatility. We talked about how crucial bond volatility is to liquidity, and that kind of is crucial to PE ratios for the S&P 500. So when this bond market gets volatile, stocks go lower. So just going to be watching this very closely.
Yeah, we've also talked about how that affects actually valuations in stocks, right? As the bond market loses its liquidity, you see more volatility in the bond market. Valuations in the stock market usually come down. So there's a pretty high correlation to that. So that's going to be something interesting to watch. Like if this is just a one-time blip up and a sort of just a readjustment period in how bonds are trading, or if volatility continues in the bond market, depending on what kind of rate cuts we see from the Fed, does that mean that valuations in the stock market need to come down? And to me, they are a little bit lofty, right, Joe?
Exactly. Just like we were talking about the VIX throughout July, throughout August, it's just going lower. It's really being led here by the market just having lots of liquidity, the market having higher valuation. So just watching this, we kind of bucked this trend. We have a little bit of a higher low here. I'm not saying this is over for move index going lower. Granted, the move index is like volatility. When it's low, it tends to mean revert higher. Just keep that in mind. Just watching this 90 area, if the move index gets higher than that, I think volatility will follow. Very possible can happen on CPI. Very possible can happen on the Fed next week. Further in volatility, we have the skew index, kind of similar spot here. We're just kind of in no man's land here, waiting for this next event. Really unsure what to happen here. And I think that's how a lot of people feel with the market. They feel great about stocks. They feel great about the future. There's just high valuations and uncertainty about the economy, which leads to lots of uncertainty.
Yeah, again, higher lows in the skew index, meaning there has been a continual demand for puts every time there's a rally in the market. We talked about that 15 level in the VIX. That's probably indicative of this skew index here. So this is something to watch for. I'd be a buyer of volatility. If we see the VIX down below 15, use some sort of hedge or maybe change out your stock and get long calls instead. But that's what we got here. I'm excited for the show, Joe, later this afternoon at noon Eastern. That's our new time going forward. This time slot will eventually go away, I think, unless you guys enjoy hearing.
I like the preview. If you guys like hearing quick volatility about the week, let us know. Yeah, but we'll be back at noon. We'll be talking about how to stay invested in the market while having protection on.
Catch you there.
You know how the financial world goes. Here comes the buzzkill. Please make sure to take some time to read this boring disclaimer. We will owe you one.